Good morning, all of you. Have a very rainy morning, actually. So, morning, namaskar, sat sri akal, vanakkam, Keem Cho, and again, I am C. Ankit Sharma, your income tax faculty, and today we will be discussing our last session for pgbp. So, before starting the session, I hope and I believe you all are studying very hard for your success. This is something you should not stop. You should increase. There should be growth in your hard work. And if it is happening, you are definitely on the right path. Never listen to others and do not take advices from wrong person. It happens generally that we listen those people who actually not in the profession. Like somebody else is going and is going to tell you that C is very difficult, even when he is not a chartered accountant. He or she will be saying that I know someone who was trying to complete this course but was not able to do it. And same, you are not able to do it. So never take advices from the wrong person. That will demotivate you. Trust in yourself, believe in yourself that you can complete this course as anyone can. So these two things are very important for this course. Today we will be discussing our assignment number 4. Only two provision has been left over there. One is persons who require to do audit. That is income tax audit. Those businesses required to undertake audit. And the last provision will be presumptive taxation scheme. There will be three sections, section 44AD, section 44AE, and section 44ADA. And after completing these provision, we will discuss all test your knowledge concepts. And I have uploaded assignment number 5, technically the test your knowledge provision, and all the diagrams, the charts. I hope you must be downloaded it from the portal. And the last session 3 MCQs, day 3 MCQs also, I have uploaded yesterday night. Okay. So before starting, of course, we have a very good thought for the day, and it might help you to understand things more easily. And this is life has two rules. First is never quit, never ever quit. And rule number 2 is always remember rule number 1. If you want to do something, if something is your passion, if you want to achieve some goal and that is your passion, that is what you want, then never quit it. If you never quit, you will get it someday. That's a promise. You should believe it. That yes, if you are on the right path, if you want to achieve something, you should never quit. Time, it will maybe taking some more time, but you will get it someday. Okay. And moving on to our notes. This was, we were discussing the last session. For that, let's good morning to everyone. Sudhanshu, Aisha, Diksha, Ruchita, Darshan, Sushil, Bhumika, Tanvita, Ramaz, Manisha, Ramaz again, Vara, Sayyad, and Abhay. So, good morning to all of you once again. So, we were discussing assignment number 4 provision, in which in last class we discussed about compulsory maintenance of books of accounts. Moving on further, illustration number 15 was also there. I guess we did not discuss it. We know there's a person carrying on profession is film artist. His gross receipt from profession are is under. Because film artists fall under specified profession case. In case of you are carrying a specified profession, there is a concept that in all of last 3 preceding year, except the previous year. So we are in the previous year, 22-23. In the last all 3 preceding previous year, the gross receipt must be at least 1,50,000 more than 1,50,000. So we can see in this example, the last preceding year having 2,10,000. The before that is 180, but in the last third preceding year, it is 1,15,000. But the receipt must be exceeding 150 in all 3 years, in each of the 3 years. So because in the third preceding previous year, it is not fulfilling that condition. So Mr. Vinod is not required to maintain specified books of account for previous year 22-23, but he needs to maintain normal books of account. Section 44AA says when you need to maintain specified books of account, it does not say that if you not fulfill section 44AA condition, then you need not to maintain books of account. It just says you need not to maintain specified books of account, but normal books of accounts need to be maintained. The solution is theoretical provision. You can go through it, of course. We discuss all these provision, and I have asked you to please go through these provision. This is theoretically. There was point number 3 and 4. You will be able to understand it more clearly when we'll complete our section 44AD and AE provision today. We were over here. It says audit of accounts of certain person carrying on business or profession on section 44AD. So we are talking about tax audit provision. Okay, somebody is asking, Amrut, sir, MCQ test. Today we are going to discuss all 15 questions from test your knowledge. So that is more important. So we will taking that questions in our today lecture. We are not taking MCQ test today. Okay, Mr. Amrut. Okay, still good morning wishes. Okay, we have discussed this illustration. Okay, sorry. So audit of accounts of certain person carrying on business or profession. So under income tax, who are liable to audit his or her books of account. That is section 44AB going to explain. We need to audit our books of account from a chartered accountant under section 44AB. Requirement of tax audit. Again, it's a theoretical provision. It is obligatory for the person mentioned in column number 2 of the table below, carrying on business or profession to get his accounts audited before the specified day by a chartered accountant. What is the specified day? That is the 30th September 2023 for our assessment year. In case of person carrying on business, if you are carrying on a business, it says, column number 1 says, in case of a person carrying business, if his total sales, or we can say turnover, or we can say gross asset of business exceeding 1 crore in the relevant previous year. If you are carrying any business and your gross asset exceeding 1 crore, then you have to audit your accounts from a chartered accountant. Note is a special thing that is connected with section 44AD. Now, note say that if you fall under section 44AD, what is section 44AD? I just told you we will discuss that section after section of tax audit. So for time being, you should understand there are 3 presumptive schemes. That is section 44AD, AE and ADA. So if you fall under section 44AD, if your business falls in section 44AD and you declare profit as per section 44AD provisions, in that case, audit is required only if your turnover exceeding 2 crore rupees. So we can say, if you does not fall under section 44AD and you carry a business, then if your turnover exceeding 1 crore, then you need to audit your books of accounts. So this 1 crore limit is applicable only for those business who does not fall under section 44AD. What is section 44AD, etc.? We will be discussing. Okay, in just 5 minutes after this section, we are there. So if your business does not fall under section 44AD, you need to tax audit your books of accounts as per if your turnover exceeding 1 crore. And if you fall under section 44AD provision, then you need to only audit your accounts if your turnover exceed 2 crores rupees. I hope it's simple and it's very, very, very easy to understand. Okay. Next, it says, in case of such person carrying on business. Now, where we have a special provision in case of business, that if you are running any business and your cash receipts is less than or equal to 5% of total receipt. And same with expenses. Point number 1 is regarding the receipt, and the point number 2 is regarding the expenses. So if you are running any business and your cash expenses and your cash expenditure both are less than or equal to 5% of the gross receipt or the payment respectively, then in that case, your turnover, if exceeding 10 crore rupees, only in that case, you need to tax audit your books of accounts. So this is applicable. This 10 crore limit is applicable. For example, if your gross receipt is 500 lakh, that means 5 crore. The turnover is 5 crore. And your cash receipts are only 20 lakh rupees. That is less than 5% of total gross receipt. In the same case, your total payment is 200 lakh and your cash payment is only 7 lakh rupees. So in this case, your business satisfying these both conditions. So because we satisfy both conditions, even your receipt is more than 2 crore, but still you need not to tax audit your books of account, as the limit applicable in this case is 10 crore rupees and our gross receipt is less than 10 crore. Okay, again, simple concept. Moving on further, for this purpose, the payment or receipt, as the case may be, by a check drawn on a bank or by a bank draft, which is not account paid, would be deemed to be. It's a bearer check, then we will treat it as a cash receipt or cash payment. Okay. In case of an assessee covered under section 44A, again, what is section 44A? What is the concept? What is the provision? That we'll be discussing after this section. For the time being, section 44A is for transporters or an assessee engaged in the business of flying, hiring, or leasing goods carriages who owns not more than 10 goods carriages at any time during the previous. So if you have vehicle with you, which is used in flying, hiring, leasing of goods transport vehicles, and if you do not own more than 10 goods vehicle at any time during the previous year, then you will follow section 44AE. What is 44A, etc.? We are going to discuss later. So if you follow section 44A, in that section, government has made some prescribed profit percentage on the basis of amount, that your profit will be treated 1,000 rupees per month, per ton, etc. Or in some case, 7,500 rupees per month. What is the relevant, what is the exact provision? That we'll be discussing in section 44A. For time being, just understand one thing. Then if you do fall in a section 44AE provision, and in that provision, income tax has made some specified, or we can say fixed income provision, that your income will be treated this much amount, minimum. That's a fixed value has been given. And if you want to show your profit less than that income tax specified profit value, okay? So 7,500 rupees per month is specified. In which circumstances, I will tell you, we will discuss later. For time being, in some cases under section 44AE, 7,500 rupees per month will be treated as your profit. Now, if you want to declare your profit less than 7,500 rupees per month, if you want to declare your profit, your actual profit is less than that, then you have to audit your books of accounts. Understand? So if such assessee, which assessee who falls under section 44AE, claims that the profit and gain from business in the relevant previous year are lower than this. So if this is lower than this, then we have to do this. Clear? So if you declare your profit less than this, then you have to make your books of accounts audited. Next, in case of an eligible assessee carrying on business whose total turnover sales gross asset less than 200 lakh and who has opted for section 4480. Now, in first point, we discussed that if you fall under section 4480, you need to maintain your books of accounts and conduct audit if your turnover is exceeding 2 crore rupees. Clear? But if you fall under section 4480, in that case, again, same as per section 44AE as above, there is a specific percentage for section 44AD also. And if you declare your profit less than that percentage under section 44AD, then again, you need to maintain specified books of accounts and conduct audit under section 44AB. So for section 44AD, there is two requirements to conduct audit. One is if your turnover exceeding 2 crore rupees. And second, even if your turnover is not exceeding 2 crore rupees, but if you declared profit less than the specified percentage as defined in section 44AD. For example, if your business fall under section 44AD concept and your turnover is only 100 lakh rupees, so it's less than 2 crore. So as per normal provision, we need not to conduct audit. But your turnover is 100 lakh and income tax prescribed percentage specified is 8% or 6%. That means if you fall under section 44AD and your turnover is less than 2 crore, then whatever turnover you have, you need to at least declare your profit up to 8% of that turnover or 6%. If the receipt in bank, then 6% of turnover. If the receipts in other than bank, then 8% of turnover. So we assume that our turnover is 100 lakh, out of which 60 lakh was cash and 40 lakh from bank. So you need to at least show 8% of 60 lakh. That means 4,80,000 as profit and 6% of bank receipt. That is 2,40,000. So total comes to 7,20,000. So the deemed profit under section 44AD will be 7,20,000. So your turnover is just 100 lakh. So you need not to conduct audit because turnover is less than 2 crore. But the second condition, it says whatever is your turnover, you have to declare at least 8% of your cash receipt and 6% of your bank receipt as the profit. So now in this case, if assessee declares profit 7.2 lakh or more, then it needs not to conduct audit. But suppose assessee says my profit is just 6 lakh rupees. That means it is less than the specified percentage, same as in case of section 44AE. There is also some specified percentage. Overall percentage is common 7,500 rupees, or in this case, percentage is profit-based percentage. Receipt-based percentage. So if assessee wants to show his profit in this case, suppose 6 lakh, then he needs to audit his books of accounts again. Clear? We will make a diagram for it also. Just relax. I will explain you it with the help of a diagram. There is a concept also that if you does not opted for section 44AD and falls in audit criteria, then for that year and for next 5 years, you cannot opt section 44AD. What is this concept? We are going to discuss this under section 44AD and AE provisions. So you will be able to understand tax audit section 44AB after reading the provision of section 44AD and AE and ADA in a better way. So just relax, do not bother. That what is happening, you will be understand this concept very easily when we will be able to discuss section 44AD, 44AE, and 44ADA. So we have discussed the provision regarding 44AD tax audit and 44AE. Now we have a in case of person carrying on profession, which is specified profession, that is section 44ADA. In case of a person carrying on profession, if his gross receipt in profession exceeding 50 lakh in the relevant previous year. The above both provision was for businesses. Now, in case of carrying on any profession, if you're in a profession and if gross receipt in profession exceeding 50 lakhs in that relevant previous year, you need to conduct audit. And again, a specific percentage also defined in case of profession, and that is 50% of gross receipt. So even if your turnover, your receipt does not exceeding 50 lakh, it is, for example, 30 lakh rupees. But you have to declare your profit at least 50% of gross receipt, that means 15 lakh. So if you declare your receipt up to 15 lakh, then there is no requirement of conducting an audit. But if in profession, you declare your profit less than 50% of gross receipt, again, in that case, you need to conduct an audit. So in case of an assessee carrying on a notified profession, section 44AA, etc., you can declare your profit 50% or more, then you need not to conduct an audit. But if you declare your profit less than 50% of your gross receipt in case of a specified profession, then you again need to conduct an audit under this section. Audit report, the person mentioned above would have to furnish by the specified date a report of the audit in the prescribed form, that is form number 3CA, 3CB, 3CD. A specified date in relation to accounts of the previous year or years relevant to an assessment year means the date 1 month prior to the due date for furnishing the return of income under section 139(1). The due date for filing of income in case of assessee other than companies who are required to get their accounts audited in 31st October of the relevant assessment year. Hence, the specified date for tax audit would be 30th September of the relevant previous year, relevant assessment year. So in this case, because we are in previous year 22-23, assessment year is 23-24. So the date of audit is 30th September 2023. Penal provision also, if you are not able to conduct an audit, a penalty in section 271B will be applicable. That will be discussed in your final level. Okay. Section 271B will be discussed at final level. So now section 44AD, ADA and AE. What these sections are, in case of some businesses and profession, income tax assume a specified percentage of profit. So if you fall under these profession or business and you declare your profit as per a fixed percentage or fixed amount per month as prescribed by income tax department, that in that case, you need not to maintain specified books of accounts, do not need to conduct your audit, and even you need not to calculate your net profit as I explained you in the session 1. We need not to do that net profit as per accounts, then allowable expenditure, then plus incomes or expenditure which is allowed or disallowed. So we need not to maintain that format to calculate net profit as per income tax. We just going to apply a specified percentage or a specified fixed amount of income, and that will be our technically net profit for such business. Before starting this provision, let's discuss with the help of a diagram the provision of tax audit. Okay. So we can say in simple term that section 44AB, that is called tax audit. In case of normal business, applying hiring business and profession. So it says if you are in a profession and your gross is exceeding 50 lakh, then you need to conduct audit. Simple. If your gross receipt does not exceed 50 lakh, in that case, if you are under a specified profession and you declared your net profit is 50% or more, no audit. And if you declare your net profit less than 50% of your gross receipt, you need to conduct the audit. Simple. In case of profession, if you are in this business which is flying, hiring, etc., leasing goods, and if you fall under section 44AE, for those, if you does not own more than 10 motor vehicle or goods carriage vehicle at any time during the previous year. Up to 10 motor vehicle. So you should not have exceeding 10 motor vehicle during the previous year. So if you fulfill section 44AE condition, in that case, if you show your income up to a specified limit, which is 1,000 and 7,500, then you not required to do any audit. And if you does not show, you show your income less than 1,000 or 7,500 rupees per month, in that case, audit is required. In case of businesses, this does not fall in case number 2nd or 3rd. It says, if you fall under section 44AD, if your business fall under section 44AD, then if your turnover or gross receipt exceeding 2 crore, audit is there. If you declare your net profit less than 6% or 8%, and your gross receipt less than 2 crore, still you need to go for audit. If gross receipt less than 2 crore and you declare your net profit more than 6% or 8%, then no audit. For other business does not fall under section 44AD. Who does not fall under section 44AD? We will discuss when we will be discussing section 44AD provision, etc. So if you do not follow section 44AD, then you need to conduct an audit if your gross receipt is exceeding 1 crore. Okay. If you're running any business and your cash receipt is less than 5% of turnover and your cash payment is less than 5% of total payment, then you need to conduct an audit if your gross receipt, turnover or sale exceeding 10 crore rupees. Clear? So this is the summary of section 44AB. Moving on to our notes. This provision. After reading section 44AD, ADA and AE, you will be able to understand more clearly also section 44AB provision, that is tax audit. So these two concepts are technically interconnected. Okay, let's see. So she's asking, dear sir, where 6%? If the payment is via bank account or through online mode, then 6%. Okay. Somebody is asking, Miss Sarah Boni Das, if my turnover is 2.5 lakh and I have a loss of 80,000, should I need to audit? If your turnover is 2.5 lakh and loss of 80,000. So we are about to discuss, Sarah Boni, the concept of section 44AD, ADA and AE. And it says that even if you show your profit or showing loss that is less than the specified percentage, but if it is less than the exemption limit, basic exemption limit of 2.5 lakh, in that case, you need not to conduct an audit. So in your question, because you are saying that you have a loss, that means your turnover is 2.5 lakh only, and the 8 or 6%, if you'll take the 8% or 6% of your turnover, that will be less than the basic exemption limit of 2.5 lakhs. So in that case, you do not need to conduct an audit. This has been specified in this provision. Let me discuss section 44AD, ADA, AE. And please, after this section, ask the question regarding tax audit concept and again the concept of 44AD, ADA, AE. Because after reading this section, the provision will be more clear. I have told you that these are interconnected. Okay. So section 44AD, turnover if less than 2 crore, 8% of gross receipt or 6% of digital receipt. Section profession, if your service is less than 50 lakh, you need to show at least 50% of your turnover as your profit. For transporter, section 44AE, own goods vehicle, less than 10, it's less than or equal to. In the photo, in the diagram, in the picture, it's writing less than, but it's equal to or less than in all three cases, less than equal to 2 crore, less than equal to 50 lakh, less than equal to 10. So whenever there is any confusion regarding the picture or a diagram or a chart with the provision will prevail. The notes will prevail in respect of any diagram or chart. Okay. So moving on to the provision in detail, and after this, you will be able to understand section 44AB. I told you tax audit and these provisions also. The special provision for profit and gains of business, we call it presumptive taxation scheme. We call it presumptive taxation scheme because the actual profit is not going to be taxable. If you fulfill these conditions, a presumed profit is going to be treated as your income based on some percentage or some fixed income per month basis. So section 44AD is for businesses. Which kind of business? Assessee. Applicable to individual, HUF and partnership firm only. So if you are a company, if you are a LLP, you cannot follow section 44AD. So if you are a company, if you are a LLP, then the turnover limit for audit will be applicable. I have told you there is a turnover limit of 2 crore and 1 crore. 2 crore for those business who fall under section 44AD. And 1 crore for those business who do not fall under section 44AD. So technically, a LLP, company, AOP, BOI, etc. They does not fall under section 44AD because that is not applicable on it. So for LLP, company, etc., the limit of turnover for the purpose of audit is 1 crore. Understand? So these point number 2 is those person on which this section is not applicable. It is not made for these person. They cannot take the benefit of 8% or 6%. So in point number 2, if in exam the question asks there is a company whose turnover is 1.5 crore, does it need to conduct an audit? The answer is yes. Because company does not follow section 44AD as same as LLP. So they need to conduct an audit on the basis of their turnover only. So if their turnover exceeding 1 crore, they need to conduct an audit. Again, not applicable person availing deduction under section 10AA or 80IA, 80IA, 80IB, etc. These were old sections. So there is any deduction regarding this or section 10AA. Deduction is taking like special economic zone, even if it's a individual. If there's any individual business, HUF business or partnership firm, and if they are availing deduction under section 10AA, again, this section is not applicable. So if you are a company, etc., not applicable at all. If you are an individual, HUF and partnership, and you are availing deduction under section 10AA, still you cannot take the benefit of 44AD. So again, if there is a partnership firm who is availing the benefit of section 10AA, that means the turnover limit will be now 1 crore, not 2 crore. Turnover limit under section 4480 will be applicable only if your business fulfill all these conditions. Okay. So 4480 is again not applicable for business having gross receipt exceeding 2 crore 200 lakh. Even not applicable for following business. Even if you are an individual, HUF and partnership firm. You fulfill first condition, you are not a company, you are not availing 10AA deduction, etc. Your business turnover is less than 200 lakhs. So you fulfill condition 1, 2, 3, 4, but condition 5 also need to be completed. A person carrying on profession as referred to section 44AA, because for that profession concept will be applicable. Section 44ADA. The point B and C is very important. This point number 5, point B and C important. A person carrying income in the nature of commission on brokerage. Now understand, if you are an individual, if you are running an individual business or HUF or firm, condition 1 fulfill, you not availing section 10AA deduction. Condition 2 fulfill, but you running a business of broker or as a commission agent. Your turnover is only 1.1 crore. So you fulfill condition 1, 2, 3, 4, but this section 4480 has no applicability on broker or commission agent. So you are out of this section 4480, and if your turnover exceeding 1 crore, you need to get your accounts audited. Same in case of agency business. Point number C says that if you are running an agency business, again, or commission business, you need to maintain your books accounts. Clear? Or a person falling under 44A. So 44A is a separate section. If you fall in that section, those provisions will applicable. If you are in a specified business, section 44AA, that means section 44ADA provision applicable. B and C are very important concept. Okay. Next, if you fulfill all the above condition, point number 1, 2, 3, 4, 5, then you can declare your profit as 6% of the gross receipt. 6% of the gross receipt paid or payable in digital mode, that is RTGS and EFT, or 8% of the gross receipt if that is other than digital mode, or a sum declared in ROI, whichever is high. You can declare a profit more than this, 6 or 8, but you cannot declare a profit less than this, because if you declare a profit less than this, then you need to maintain your books of accounts. So concept says like this, yes, if your turnover, for example, is 100 lakh, if your turnover is 100 lakh and all in cash, so 8% concept will be applicable. So section 4480 says that if you declare your profit 8 lakh rupees, you need not to get your accounts audited, etc. We will accept your profit. But if you want to declare, no, my profit is 9 lakh. In income tax return, you want to pay tax upon 9 lakh. So concept say higher will be your profit. So income tax say it's very good if you want to show a profit higher than this. So under section 4480, AE and ADA, in all these three presumptive taxation scheme, the minimum percentage or amount which has been prescribed by the government, at least you have to declare your profit that much, or a sum higher you can declare in your ROI. That will be deemed your profit. So if you want to declare your profit 9 lakh rupees, you're most welcome. Income tax will charge tax on 9 lakh. But if you want to show in this section, your profit is only 7 lakh, that is less than 8%, then you need to get your account audited. Okay. A very interesting provision. If you are a partnership firm, if you are running a partnership firm, this 8% or 6% will directly be your net profit. There is no deduction required to be made under section 4480. If you are declaring your profit 9 lakh rupees or 8 lakh as per the example, then will be no deduction for depreciation as per income tax. There is no plus minus concept is applicable. This will be directly our answer as net profit of that business. Even if you're running a partnership firm, we need not to add anything or that to exceeding 12% interest, or you need not to calculate the book profit, etc. No, nothing. This 8% is directly your answer, even if it's a partnership firm. Advanced tax provision will be applicable. As in normal case, what is advanced tax provision? You will be in chapter 9, I guess, that is going to be discussed. Again, advanced tax is applicable on for this section. No requirement to maintain books of specified books of account under section 44AA. So there was a question regarding Miss Sara Bonidas was asking a very interesting thing, a very interesting example. You should understand. For example, your turnover is 30 lakh rupees under section 44AD. Your turnover is 30 lakh rupees. Okay. And it's all in cash. So as per government specified profit, that is 8%, we need to declare at least 2.4 lakh as our income, 8% of 30 lakh. Clear? And the concept say, if the assessee says, my net profit is 2 lakh. Now, as per the provision, we discussed yet, because he is trying to show his net profit is less than 8%. So there should be maintenance of specified books of accounts and audit also. But there is a concept which says no. If in any case, you show your profit less than the specified percentage, as per specified percentage, profit will be at least 2.4 lakh. And you want to show it less than the specified percentage. But if as per specified percentage, the profit is less than the basic exemption limit, it does not exceed the basic exemption limit, that is 2.5 lakh. So if your profit, if your income does not exceed the basic exemption limit, in such case, there is no requirement to maintain specified books of accounts and conduct the tax audit. If in this example, I say that 40 lakh is your receipt in cash. So now 8% would have been 3,20,000. And he wants to declare his profit as now 2 lakh rupees. So in this case, he need to maintain books of accounts and audit because the amount of income is exceeding the basic exemption limit. So if you show your profit less than the specified limit and the percentage, if applicable on your turnover, comes that amount which is under the basic exemption limit, then still you need not to maintain books of accounts or audit, because government says even if we declare 8%, we are not going to recover any tax. So why we need to conduct books of accounts, audit, etc. Remember, what is the government concept? The income tax concept is this, that even in this case, he shows profit less than 8%. So even if we assume the profit is up to 8%, that is 2.4 lakh, it is still in the exemption limit. So we are not going to have any tax on that. So let's leave this case for audit. So in this case, second case happened, that is 40 lakh and 8% is 3.2 lakh. Then we need to conduct an audit. You might be thinking he can get rebate, etc. But that's a second concept. Rebate is a different thing. It's not the exemption limit. The concept is applicable for exemption limit. Okay. So this was the concept also, and it's very interesting. Next, moving on to the provision, section 44AE. It says if you are transporter not own more than 10 vehicles at any time during the previous year. So income per vehicle has been mentioned. At least you have to declare your income this much. If you have medium or light motor vehicle, then the income will be 7,500 rupees per month or part of the month. It's very interesting. Per month or part of the month, vehicle owned by SSC. Understand? Vehicle owned by SSC. So there is two things which need to be understood very carefully. If I owned any vehicle for 8 months and 1 day, 8 months, 1 day, 8 months, 1 day, still 9-month calculation will be done because it says 7,500 rupees per month or part of them. So even if I owned any vehicle for 8 months, 1 day, 9 months calculation will be made. And use is irrelevant. The word is said owned. If I have one motor vehicle and I did not use it for the whole previous year, not even for 1 day, but it is owned by me for the whole previous year, then 7,500 rupees per month for full year will be deemed as my profit. We will discuss it with the help of a numerical. So for medium and light motor vehicle, the concept, the amount is 7,500 rupees per month. But if it is a heavy goods vehicle has been defined if the capacity is 12 metric gross vehicle weight, or we can say 12,000 kg. So if the capacity of that goods vehicle weight is more than 12 metric ton, the income would deem to have been equal to 1,000 rupees per ton of gross vehicle weight per month for each goods vehicle. Per month again or part of the month and plus owned by SSC. The same concept as above will be applicable. So if I have a vehicle having 15,000 kg of gross vehicle weight, that means 1,000 per ton. So that means 15 into 1,000, because 1,000 will be charged for 1,000 rupees for per ton of gross vehicle weight. So whatever kg has been given, you have to divide it by 1,000. That will my 15 into 1,000. So per month, the income will be 15,000 as under section 44A. Do not worry, we have very good example for this section. So we will be discussing it. That was section 44A. Now moving on to section 44 ADA, that is for presumptive taxation for professional, pgbp. Section 44 AD for specified profession only. It says new section 44 AD proposed to be inserted. Technically it is inserted already, so we can remove it. Inserted to provide for estimating the income of an SSC individual, HUA partnership firm engaged in any profession referred in section 44AA1, such as legal, medical, engineering, etc. What is the concept? Total gross receipt should not exceed 50 lakh. If the receipt exceeding 50 lakh, then normal calculation of pgbp will be applicable. Income shall be estimated at 50% of the total gross receipt. As in section 44 AD, it's 8 and 6%. For a specified profession, it's 50% is your income. Deduction under section 30 to 38 deemed to have been allowed, including interest and remuneration. Kindly remove this point. It has been wrongly inserted. Deduction for partner interest, etc., can be claimed under this section. This is wrong. Kindly removing this provision. In the detailed provision, it has been written correctly. Okay. Now, presumptive taxation for person having income from business. For section 44 AD, now there is a specific concept also. What we were discussing in the table above, and I told you, we will discuss it in detail when we will be discussing our notes. Now it says one thing, that if any person falls under section 44 AD, for example, Mr. A, he falls under section 44 AD. But in previous year, he declared income under section 44 AD for 1920, for 20-21, etc. But in previous year, 21-22, he opted out from 44 AD. For example, in previous year 21, his turnover was 80 lakh. All cash. So he need to declare his profit at least for 8%. That will be 6.4 lakh. In previous year 21-21, he declared his profit only 6 lakh rupees. He needs to declare 6.4 lakh, but he declared his profit only 6 lakh. So he technically opted out from section 44AD provision. So in this year, he needs to maintain books of accounts as per section 44AA and need to conduct tax audit also under section 44AB. So for previous year 21-22, he opted out from this section 44AD concept and audited his books of accounts and maintain specified books of accounts. So a new provision has said that if you opted out from section 44AD provision in any previous year, then for the next previous year 22-23, next 5 years, that is 22-23, then 23-24, then 24, 25, 25, 26, 26, 27. So you came out from 44 AD in previous year 21-22. So in this year, normal provision applicable, and for next 5 year also, now you cannot take the benefit of section 44 AD. So even in previous year 22-23, your turnover now, for example, assume 90 lakh. And you want to declare 8% as your profit, still you won't be allowed to do this. So once you opted out from section 44 AD in any previous year due to any reason, then for that previous year, normal provision will be applicable, and for next 5 successive assessment year, next 5 assessment year also, you cannot come back to section 44 AD. So now, if in this example, assessee wants to take the benefit of section 44 AD provision, then he had to do that after expiry of previous year 26-27. So he can take the benefit of section 44 AD concept in previous year 27 and 28. Till that, he needs to maintain a specified books of accounts, and as per normal provision, he needs to declare his profit. There is no benefit of 8% or 6% for the previous year 21-22 or for next 5 successive assessment year. So following amendment proposed, it's not again proposed, it has been done. 44 AD, presumptive taxation for retailers wherein eligible assessee declares his profit for any previous year in accordance with provision of this section. He declared profit for any of the 5 consecutive assessment years succeeding such previous year, not in accordance with the provision of this section. So if in any year he is not declare his profit as per section 44 AD, then it for that previous year and for next 5 previous year, he cannot do so. Okay. And it's not proposed, it has been done. Okay. So this is the table tablet form in which you can understand the provision we just discussed above. Eligible assessees for section 44 AD is resident individual, HUF partnership firm, but not LLP, engaged in eligible business, or who claim section 10AA deduction or chapter 6A under C deduction in respect of certain incomes. Non-applicability of section 44 AD in respect of following person carrying on a specified profession, earning income from commission brokerage, person carrying on agency business. Clear? Then any business other than business referred to in section 44 AE whose gross turnover in less than or up to 200 lakh. These are the conditions need to be fulfilled. So these are detailed provision of section 44 AD, AE and ADA. Before that, I just explained in a summary form. So now you will be able to understand all these provision in detail. Presumptive income was 8% or 6%, okay, or higher if you want to show it. Non-allowability of deduction allowable under section 30 to 38 shall be deemed to have been given full effect. So even in case of partnership firm, if you are under section 44 AD, interest to partners or firm need not to be deducted. The 8% and 6% is your exact answer. WDV. Yeah. Even if you are running section 44 AD, or you are applicable, or if the section 44 AD is applicable upon you, or AE or ADA. In all the three cases, the concept says, even if you cannot claim the depreciation out of that specified percentage, that means it says, for example, you are running a business under section 44 AD and having 60 lakh rupees gross asset, all in cash. So I show my net profit is 4,80,000. Clear? Opening WDV of my block of asset is the 10 lakh rupees. So we are not allowed to take any depreciation deduction out of this profit because this is my final profit. But the depreciation deemed to have been claimed. So if the block having 15% dep rate, I need to deduct this 1.5 lakh as a depreciation, and the remaining WDV will be 8.5 lakh. I cannot claim this 1.5 lakh from this profit because this is fixed percentage. But we need to deduct the depreciation every year out of our block. For next year, my opening WDV will be 8.5 lakh. Why we are doing so? Because suppose in next year he opted out from the scheme. He said, I will declare my profit less than 8%. So if he opted out from this business, then normal calculation for business income will be done. And for that, we need the actual WDV value to claim depreciation. So if next year he comes out of the benefit section 4480, then we need to calculate the normal depreciation. So we should have the actual value of the asset. We cannot claim depreciation on 10 lakh. We need to claim depreciation on 8.5 lakh. So in all section AD, AE or ADA, we need to allow depreciation even if we are not claiming it in the normal concept for fixed percentage, etc. WDV of any asset eligible business profession shall be deemed to have been calculated as if the eligible assessee had claimed and had been actually allowed depreciation for each of the relevant assessment year. When we need to maintain our books of accounts and audit. So again, if you are in section 44 AD, if your turnover exceeding 2 crore or you are showing your profit less than 8 or 6%, you have to conduct an audit. If you are in section 44 ADA, then you are showing profit less than 50%. And for section 44 AE, if you are showing your income less than the specified percentage, in all these three sections, it has been written. And as per the concept, again, the concept says if you declare your profit less than 8 or 6% section 44 AD, then for next 5 years also, you cannot claim the benefit of this section. So you should read these provision now, and it will be really easy you to understand because we have discussed the summary concept also. So the meaning of heavy goods vehicle, gross vehicle, etc. So let's discuss some illustration to understand these provision more easily. So we just need to tell in different assessment year, do Mr. A need to maintain specified books of accounts or conduct an audit or not? So let us consider the following particulars relating to resident individual Mr. A being an eligible assessee carrying on retail trade business, whose total turnover do not exceed 2 crores in any of the 3 previous years relevant to assessment year so and so. And need to tell in above case, Mr. N eligible assessee opt for presumptive taxation on section 44 AD from 23-24 and 24-25 and offers incomes of 11.20 lakh and 12.30 lakh on gross receipt of 1.8 and 1.9 crore respectively. However, for assessment year 25-26, he offers income of only 10 lakh on turnover of 2 crore, which amounts to 5% of his gross asset. He maintains books of account section 44AA and gets the same audited under section 44AB. Since he has not offered income in accordance with the provision of section 44, okay, I am reading the answer. Let me discuss it with you. I was thinking that is a part of question, but technically that was a solution. So we should solve it with the help of the provision what we have. Okay. First of all, we need to see whether the provision, whether the concept is applicable to claim the benefit of section 44AD or not. So total turnover is 1,80,000. So condition is fulfilled because turnover is not exceeding 2 crore. Amount received prescribed electronic mode. Out of this 160, he received 180. He received 160 as per electronic mode. So we need to take 6% of 1 crore 60 lakh. That will come 9,60,000. Income offered for taxation. So he's at least he should declare 9,60,000 as his presumptive income, but he wants to declare more than that. That is 11,20,000. So income will be taken 11,20,000. But one thing has been left because out of this 180, 160 was via electronic mode. So balance 20 lakh will be via cash. We need to take 8% of that also. That will be 1,60,000. So 960 plus 160. That means he wants to declare his income as 9 lakh 11,20,000. So in that case, because it is up to the specified limit, so he can opt for section 44AD. So 6% plus 8% was coming as 11,20,000. What he at least need to declare, and he is declare and fulfilling the condition section 44AD. So this section has been applicable. No need to maintain books of accounts and audit for assessment year 23-24. Now moving on to next year, the total turnover is 1 crore 90 lakh. Out of this 190, he received 1 crore 45 lakh as electronic mode. That means 45 lakh as cash. It's less than 2 crore. So first condition fulfilled. For 1 crore 45 lakh, 6% will be taken as his income. That is 8,70,000. And for 45 lakh, 3,60,000 will be his income. So 1,230 will be the prescribed percentage net profit, and he is showing this. So that means condition has been fulfilled. There is no requirement to maintain specified books of accounts or audit. He can still be in section 4480. The third year turnover is 2 crore. It should be less than 2 crore for taking the benefit of section 4480. So section 4480 now cannot be applicable. He needs to declare profit as per normal provisions. So that's why I need to maintain books of accounts plus need to conduct an audit for assessment year 25-26. So technically he comes out in assessment year 25-26 from section 4480. So for now this year he cannot opt normal concept of 4480, and for next 5 years he also cannot take the benefit of section 4480 now. Now we should read the answer, of course. So it was saying for assessment year 25-26, he offers only 10 lakh or turnover of 2 crore, which will amount to 5%. So he needs to get max of account. Okay, so there was a problem up to 2 crore. Up to 2 crore, the provision of section 4480 can be applicable. So in this case, again, condition 1 is fulfilled. But he needs to declare up to 1 crore 80 lakh 6%, and balance 20 lakh 8% should be declared as profit for this section. That will come 10,80,000 and 1,60,000. But he just declared his profit, that is 10 lakh rupees, which is technically 5% of the gross asset. So because he show his gross asset, that is 5% of his turnover. So section 44 AD condition has not been fulfilled. Turnover is within the limit up to 2 crore. Section 44 AD provision can be applicable if the turnover is 2 crore and 1 rupees. So he will not be able to fulfill condition number 1, but because turnover is up to 2 crore, he is fulfilling technically condition number 1. What he is not fulfilling is the specified percentage, which should be declared as your deemed income, which is 5% of 2 crore. That should be at least 6% or 8%. So he technically opted out from section 44 AD provision. So for that year, he cannot applicable, this section cannot be applicable, and for even next 5 years, it cannot be applicable. So the provision says because he offers only 10 lakh, that is 5% of the turnover, he needs to maintain his books of account for this year, and he needs to conduct an audit in section 44 AB also. Since he has not offered income in accordance with the provision of section 44 AD for 5 20 year from 23-24, he will not be eligible to claim the benefit of section 44 AD for next 5 assessment year, succeeding from 25-26 and from 26-27 to 2030 and 31. Now provisions regarding Mr. Praveen engaged in retail trade reports a turnover of 1 crore 98 lakh and 50,000 for the financial year 22-23. So turnover is less than 2 crore. So up to 2 crore. So the condition 1 is fulfilled. His income from the said business as per books of accounts is 13 lakh 20,000. Computed as per the provision of so and so, profit and the gains for income tax purpose. Retail trade is the only source. Assessment year 22-23 is the first year for which he declared his business income in accordance with the provision of presumptive taxation. Question is Mr. Praveen also eligible to opt for presumptive determination of his income chargeable to tax for assessment year 22-23? So we need to check. There is no information given regarding the turnover value, if it is as per online mode or other than online mode. Let's see how much percentage he declared. So technically he's declared his income more than the said business per books of account is 13 lakh 20,000. So he's fulfilling all the conditions, so he can go for the presumptive taxation scheme as his turnover is less than 200 lakh. Question second, if so, determine his income. How much income he need to declare? He need to declare only 8%, and that will come 15 lakh 88,000. So this profit can be described assuming that all the income has been received as per other than electronic mode. In case Mr. Praveen does not opted for presumptive taxation scheme, what are his business obligation? Mr. Praveen declared profit for previous year 20-21-22 according with the presumptive taxation. So if in this year he is not declaring his profit as per section 4480 or he opted out, then for this year and for next 5 years, he was not able to claim this section benefit. Theoretical provision, you need to read it. Date of audit, if audit is applicable, your written filing date will be 31st October, otherwise it will be 31st of July. Now this is a numerical provision regarding section 44A. So how we need to calculate the income under this section? Mr. X commenced the business of operating goods vehicle on 1/4/2022. He purchased the following vehicles during the previous year 22-23. Compute his income under section 44A. So for the applicability of section 44A, first of all, we need to see that total number of vehicles must not exceed 10 at any time during the previous year. So we can see total number of vehicles is 2, 1, 3, 6, 7, 10. So total number of vehicles is exactly 10. So section 44A condition has been fulfilled. Now we need to calculate the amount of income need to be presumed. So those vehicles having more than 15,000, more than 12,000 kg weight, that means more than 12 metric ton, will be treated as heavy vehicles. So these two are heavy vehicle, all others are light or medium. So for light and medium vehicle, the concept says 7,500 rupees per month per vehicle or part of the month owned by us. So in first case, 7,000, we have purchased two vehicles. It has been purchased on 10th April. So we will take the part of the month also. So we need to calculate month from April till next month. That means 12 months. Not 7,000. The value was 7,500 rupees per month. So we need to take 7,000 rupees, 7,500 per month for two vehicles for 12 months full value. So the amount will be 1,80,000 in first case. After solving this question, I will take your queries. Second is 6,500. Again, only one vehicle is here. And it has been purchased in 15th March 23. So only for 15 days. It was owned by me. But we will take 1 month, of course, for this also. Part of the month will be treated as full month. The value of profit, deemed profit, will be 7,500. Now there were three vehicles purchased in July 16. So we will consider July also. July, August, September, October, November, December, January, February, March. That means 9 months taxable, 7,500 rupees. That will come 2,02,500. Okay. 11,000 only one vehicle. It is been purchased in January. So we will take January, February, and March. 7,500, that is 22,500. Now the heavy vehicles goods are over here. The concept says 1,000 for per metric ton. So we will convert these value in metric ton. So it will be 15. 1,000 for each metric ton. That means 15,000. Two motor vehicles, and it has been purchased in August. So we will consider August also. August, September, October, November, December, January, February, March. Total 8 months are here. 15 into 1,000 into 2 into 8, that will come 2,40,000. Again, this is also 15,000 metric tons. So that will be again 15 into 1,000 into, we have only one vehicle and it's in February. That means 2 months. So that will be 30,000. Total value will be 6,82,500. So this will be our deemed profit under section 44A. Always remember, date of put to use is irrelevant. The date of purchase will be considered only. Would your answer change? The goods vehicle purchased in April 22 were put to use in July 22? There will be no effect on the answer because put to use is irrelevant for section 44AE concept. So it's a solution. You can see this. Now, computation of business income in cases where income is partially agricultural, etc. I have asked you already in the last class that this concept has been discussed in the chapter number 3. The income which do not taxable, that is exempted income. So I am not going to read these provisions over here. I am going to skip it. The example also. So again, our notes concept, our notes provisions has been done. All the theoretical numerical topic we have completed. We have left with the chart presentation. That will help you to understand the provisions in a very short span of time. That will be kind of a revision also. And the test your knowledge concept also, almost 15 questions are there. So we need to discuss each and every question with you today. Let's see if there is any query regarding this. (44A) Mrs. Varsha is asking, in case of vehicle, monthly income limit is for per vehicle or from all vehicle. The monthly limit is for per vehicle per month. It's not for all vehicles. Whether it's normal vehicle, light or medium, 7,500 rupees per month per vehicle, part of the month owned by SS. And same in case of heavy vehicle, that is 1,000 for each metric ton per vehicle per month, part of the month owned by SS. Okay. Moving on to diagram. No more query, I guess. Okay. So moving on to our chart presentation now, and I try to make all important provision diagram so that it will help you to understand the concept easily and with very short span of time. So you can revise these provision with me. I am going to discuss these provision in a very short discussion mode. We have already discussed the detailed provision with the help of the provision. I have already told you, if you are reading, find any confusion between the chart or the theoretical notes provided to you, the notes provision will prevail. Okay. So it's very difficult to cover the all provisions of pgbp in chart presentation. So I prepared 4 charts for your help, and I believe that that is going to really help you in understanding the provision in a short time. So section 29 and 30, which talks about building and plant and machinery. Section that was 31 and 30. Section 30 and 31 talks about it. Section 29 explain about the expenses, allowable expenses. So that's a very simple concept. Section 30 and 31, which is regarding building and plant and machinery, etc. It says if it's a revenue expenditure, then you can claim it in a P&L debit side. And if it's a capital expenditure, you can claim a depreciation. In this section 30-31, we discussed if you are a tenant, you can claim rent, repair, rate and tax, etc. And if you are a landlord, you can claim, and if it's used for business, you can claim rent rates, premium value, repair, etc. And if it's the capital expenditure, you need to claim depreciation. Section 32 talks about depreciation, which is a block of asset concept. Same depreciation percentage asset will form part of a block. One asset comes in a block, its individual identity ceases. Any asset that comes to the block, we will treat it as a single asset. There is no concept of different asset. They will all treat as a single asset. To claim depreciation, value and asset both must exist in the block of asset. You already discussed it. If you want to claim depreciation, then in that block of asset, value and the asset should be there. At least some value or at least one asset should be there to claim depreciation. If there is value and no asset, you cannot claim depreciation. If there is asset but no value, still you cannot claim the depreciation. There is a concept of applicability of depreciation rate as per the use. It can be 0%, full rate or half. So if asset purchased in previous year and not put to use, asset purchased in previous year and not put to use, then previous year you cannot claim DAP. In subsequent year, even if it's not used, no DAP. If it is put to use, full depreciation rate can be applicable. If purchased in previous year and put to use in the previous year, it's less than 180 days, half depreciation rate applicable. If it is equal to or more than, then full depreciation rate can be applicable. SY stands for subsequent year, always full rate of depreciation applicable. The format for claiming depreciation WDV, opening plus asset actual cost as per section 43(1). Less money received, etc. Whatever the value we will find out after deducting money received, we can claim depreciation on that. That will be closing WDV. If not given in question which asset has been sold, always use FIFO method. That is also I have explained you earlier. Moving on to section 35D, these diagrams has not been made as per the sequence of section we have discussed, because there was a limit of preparing diagram, but there are sections in chapter diagram 1 or 2 or somewhere else. So there is, I have explained the section in any of the diagram you can find out, but that is not might be in the sequence we discuss the provision. But provisions are there, like section 35D. We discussed section 35 before it. So section 35 is in the second chart, and section 35D that is regarding the preliminary expenditure is over. So section 35D says if any expenditure regarding preliminary, it is allowable to Indian company and non-corporate resident assessment. For company, it is 1/5 of lower actual expenditure or 5% of higher of cost of project or capital employed. Others, 1/5 of actual expenditure or 2.5% of cost of project, whichever is lower. What were the actual expenditure? There were project report, market survey, registration, MOA expenses, brokerage, etc. What is the definition of capital employed and cost of project? It has been written over here. Now, section 35 say that is scientific research. It's in very short forms are there because in a chart we cannot use details form because very difficult because due to the limit of space. So if it is commencement of business, any scientific research expenditure, if it is before commencement of business, then only R stands for revenue and C stands for capital. So any scientific research expenditure which is before commencement of business, only revenue or capital, it has been allowed if it's between 3 years from the date of commencement. For revenue, only material and salary is allowed. For capital, all except land is allowed as expenditure in the year of commencement of business. So R stands for revenue, C stands for capital. Within 3 years, those expenditure has been done before commencement of business can be claimed as reduction. And allowed if you are doing own research 100%, if you are outsourcing it, then also 100% reduction can be claimed. In this case, related or not related. In other case, it should be related to your business. After commencement, all revenue, all capital are allowed except land. That was chart number 1. Moving on to chart number 2. In chart number 2, first of all, general expenditure, family planning only for company. If you are incurred any expenditure for family planning, general provision is section 36 we are talking about. So if there is any expenditure regarding family planning purpose for employees, it will be allowed only to a company. It says it will be only allowed to a company. Unabsorbed depreciation, if there, it can be carried forward till infinity year and can be set off from any income except salary and casual. Insurance policy, keyman insurance policy is allowed as deduction. Other general insurance policy is allowed. Mediclaim for employee, it should be via check. It should not be via cash, etc. Only in that case, mediclaim insurance for employee can be allowed. Section 36 talk about contribution for approved fund. So I have made the combined provision for section 36 and 43B. What we have discussed in earlier. If there is employee contribution, it should be pay up to due date of the fund. If it has been paid, then employer can claim deduction. If employer was not able to contribute that amount into the fund up to the due date, deduction will be less. If that's an employer contribution, then deposited up to due date of ROI, then deduction can be claimed as per section 43B. And if after due date of ROI, deduction will be claimed in the year for, we can say, payment has been made. Payment for CSR, we know it has not been allowed. Any payment to CSR, corporate social responsibility, is disallowed. That is not going to be allowed as deduction. No reserve and provisions for bad debts allowed. Only bad debt write-off can be allowed as deduction. Section 40 regarding any salary and interest to proprietor and member of individual AOP, BO, HUF is disallowed. Salary and interest to only partners allowed as per partnership from assignment as per section 40P. The TDS concept, if you pay to a non-resident salary, then deduction and deposit up to due date of TDS. Only that in case salary deduction will be allowed. Otherwise, it will be less. For other payment other than salary, deducted deposit up to due date of ROI allowed. or if do not deposit directly up to due date of ROI, it will be allowed in the year of deduction and deposited. So if payment made to a resident in India, salary and other same provision, deducted and deposited up to ROI allowed. Otherwise, 70% will be allowed in previous year and 30% will be allowed in the year of deduction and deposited. If payment to resident outside India, then on salary, concept of non-resident salary will be applicable, and for other, concept of resident in India others will be applicable. Section 40A says any payment to relative exceeding the FMV to specified person, the excess amount will be disallowed. Any payment to any person same day exceeding 10,000 or 35,000 in case of transporter is disallowed. If it is in cash, banker check, etc. Sorry, cash, bearer check, etc. It should be any mode other than cash or as specified by government. No provision or reserve allowed except gratuity payable in the previous year. And fourth point says any staff, any contribution to any staff welfare fund disallowed if not genuine. Section 43B says that following payment will be allowed only if it has been paid up to due date of ROI. The same previous year, and if does not pay due to up to due date of ROI, you can claim it in the year in which it has been paid. That is employer contribution, income tax, indirect taxes, cess, fees, government, stamp duty, etc. Bonus commission, interest to any bank, leave encashment, payment to railway, interest on loan from any cooperative bank, deduction not related to balance sheet. This is wrong. Next is Section 37(1), which says all expenses allowed if there is no specific provision has been made for any expense. It can be allowed if following condition has been fulfilled. Not personal, that expenditure should not be personal in nature, not capital nature, and only for exclusively business. Payment to political party has been disallowed. Everything in income tax disallowed. Cess, surcharge of income tax is disallowed. Everything in IDT is allowed except penalty. STT, security transaction tax, and corporate commodity transaction tax. Both are deductible if that is your business in stock. Penalty for violation of law is disallowed again. That was chart number 2. Now moving on to our chart number 3. That is for presumptive taxation scheme. We just discussed this today. 44AD for non-specified profession and all business. I have told you if there is any confusion, in notes or chart, the notes provision will prevail. So individual HUF form applicability, no deduction for 10AA ATIA, sales should not exceed 2 crore, no commission and agency business. Net profit should be 6%, digital sale 8% for others. If net profit is less than 5, then audit plus books of account should be maintained. For transporter, we know the value. For a specified business, we know the value. This is for partnership firm and LLP. 2 more deduction will be applicable. That is, interest exceeding 12% will be disallowed. Only up to 12% is allowed. And for salary, we need to calculate the book profit as per the provision. And book profit says net profit as per income tax, add exceeding 12% interest if there is anything, and full salary as per account need to be added back. You will find the book profit and you will find then the allowable salary, maximum allowable salary as per income tax, and then out of that income tax allowable salary and accounts lower will be allowed as deduction. This is our last chart, which is about additional depreciation concept. Additional depreciation for manufacturers only for new asset, for plant and machinery, except ships and aircraft, second-hand machine, which machine those are used in office, motor vehicle, etc. Rate of DAP will be 20% and 10% if it is used less than 180 days. Purchase and put to use should be in the same year. If purchase and put to use less than 180, then 10% in the current year and balance in next year. 17.5% is the percentage, it was wrongly written. Section 3580 is talking about specified business. So if there is a specified business, in that case, you claim all the deduction except goodwill, land, and investment. Business related to cold storage, warehouse, depot at custom sugar warehouse, pipeline of gas and iron ore, affordable and slum housing project, hotel, second star hospital exceeding 100 beds, fertilizer, honeybee, semiconductor, wafer fabrication businesses. So those were specified businesses in which you can claim the deduction as per the provision. This fifth concept I am deleting. You need not to read it because that is not a note. That's a penalty which is not under pgbp head. That's separate penalty. So that will be in some other chapter you will be discussing. Now, the last concept is in the chart regarding the sale of scientific research asset. So, if we sold our scientific research asset, in that case, there is two concepts applicable. If it is used after using for other business or if it has been sold without using for other business. So, there will be two concepts. If we sold it without using for other business or we sold it after using for other business. So, here we are for our provision. So if there is scientific research asset or section 3580 asset, almost same provision has been applicable, sold without use for other business, then PGBP will be net sale consideration or cost of the asset, whichever is lower. That will be your PGBP. And capital gain will be calculated only if the net sale consideration exceeding the cost. Sold after use for other business, then that asset will form part of your block of asset having a nil value, and at the time of sale, capital gain provision will be applicable. There will be no PGBP income under this section if asset has been used for your business and then so. These were chart presentation. I hope this is going to help you in your provision. When you will revise your provision, that will really going to help you if you will read it via help of the diagram. So now we have rest with our test your knowledge questions. Those we will be discussing after the break. So if there's any query, let me see if there's any query. Then let's find out. Then we will move on to test your knowledge question. All the question one by one we are going to discuss. So I guess there is no query till now. So we are going for a short break, like 10 minutes break, and then when will we resume? We will be discussing our test your knowledge program. You can send your queries also. I'll take that after the break. So Manish ji, can we Welcome back, everyone. So we were discussing, or we can say that we have discussed or completed the provisional concept of pgbp. Now we have left with our test your knowledge. Before the test your knowledge, I want to tell you a small story. So how many of you want to listen a small story? Let's see. How many of you not sleeping? How many of you actually is there to listen? So there's a very interesting story, and this is very close to me also. A very short story, like for 2 minutes. I want to share it with you. So how many of you want to listen? If you are interested to listen, then only I'm going to tell you. Let's see. If you are here, if you are focused, if you are attentive, if you all are came back, then I am going to tell you a very interesting small story, and that is very inspirational also, and it's very real also. So, who wants to listen? This is story. Okay, Komal is saying yes. Okay, Rajiv Kumar also want to listen. Very good. So you all are not sleeping. That's very nice to see. I will tell the story. Let me wait for some more to tell me that yes, they want to listen. Because until otherwise, somebody don't want to listen. I don't speak. I generally speak very less technically. So if there is somebody who want to listen me, only then I talk. Okay, Bhumika also want to listen. Great. So हिंदी में सुनाए तो चलेगा सबको? Because हिंदी में थोड़ी feeling आती है. Hindi is like our mother tongue, so it technically feels so good. If there's some story or a joke or a saying, of course, तो थोड़ा हिंदी में सुनाते हैं. Okay. हुआ क्या? एक बारी एक सी था, वहाँ एक बहुत बड़ा बीच था. So there's a very big beach there. So एक छोटा बच्चा वहां पर खेल रहा. And what happened? A very big wave, a very huge wave of water came. So एक बहुत बड़ी wave आई, and अपने साथ बहुत सारी fishes को वो बीच पर फेंक कर वापस चली. Huge wave has come, and a lot of fishes came out of the sea and on the beach now. And there were thousands of fishes there. Thousands, बहुत सारी fishes were now on the beach, and they were almost dying. Like within 2 or 3 minutes, they all were about to die. सब मरने वाली थी 2-3 मिनट के बाद, because without water, of course, they cannot survive. बीच पर बहुत सारे लोग थे, बहुत सारे. सब देख रहे थे. कोई कॉल कर रहा था पुलिस को, कोई कॉल कर रहा था किसी को, कोई किसी को बता रहा था, कोई वीडियो बना रहा था. They were discussing, oh God, अब ये बहुत मुश्किल होगा. They all gonna die, etc. They were thinking कि हम सबको बचा सकते हैं या नहीं बचा सकते, but nobody is doing anything. तो एक बच्चा जो छोटा था, उसने देखा, उसके पास एक छोटी सी बकेट थी, बहुत छोटी, like very small बकेट. छोटा सा बच्चा था, 5-6 साल का. एंड उसने क्या किया, वो भागा. उसने अपनी बकेट में 2 फिशेज ही आ सकती थी, छोटी सी बकेट थी और कोई बकेट वहां थी नहीं. तो उसने वो 2 फिशेज को अपनी बकेट में डाला और भागकर वापस से सी में फेंक कर आया. फिर भागकर वापस आया, फिर से 2 फिशेज को डाला और फिर से फेंक. तो सब लोग उसका मजाक उड़ा रहे थे, कुछ हंस रहे थे, कुछ से एडवाइस कर रहे थे कि ऐसे क्या करोगे, लाइक थाउजेंड्स हैं, लाइक 20,000 फिशेज आर हियर, इतनी सारी, तुम ऐसे करके बचा नहीं पाओगे सबको, ये तो मरने वाली हैं 2-3 मिनट में. एंड ही वाज डूइंग द सेम थिंग अगेन अगेन. एंड व्हेन एक अंकल आए, उन्होंने पकड़ा और बताया, बेटा इससे कुछ नहीं होगा, दे ऑल आर गोइंग टू डाई. देन ही सेड कि मैं 5 या 10 या 15 इनको तो बचा पाऊं, एटलीस्ट फॉर उन 15 फिशेस के लिए तो मैं लाइफ सेवर बन जाऊंगा. मैं 20,000 को नहीं बचा सकता, मैं 10,000 को नहीं बचा सकता, बट जितनों को बचा पाऊंगा, एटलीस्ट दैट मैटर्स. एटलीस्ट 10 या 5 या 15 उनको तो एटलीस्ट बचा ले. सो दिस आंसर वाज रियली वेरी ब्यूटीफुल आंसर, एंड दैट्स मैटर इन आवर लाइफ आल्सो. जो भी हम अच्छा करते हैं, डजंट मैटर कि हम सबके लिए कर पाते हैं, बट जिसके लिए करते हैं उसके लिए तो बहुत बड़ी बात है. अगर वहां 100 लोग हैं जिनको खाना चाहिए और हमारे पास सिर्फ 3 या 4 लोगों को खाना देने के लिए अफोर्डेबिलिटी है, तो अगर हम वो 3 या 4 को पहुंचाते हैं, So for these 3 or 4 peoples, उनके लिए तो वो बहुत बड़ी डील है। जितनी फिशेस को वो बचा पाए उनके लिए तो वो लाइफ सेवर हो। सो इट डज नॉट मैटर कि हमारा एफर्ट कितना बड़ा है, इट मैटर्स हमारा एफर्ट है। सो इन योर लाइफ ऑल्सो, फॉर योर स्टडीज ऑल्सो इट मैटर्स। इफ यू थिंक कि आज हमारे पास 4 घंटे में पढ़ने वाला हूँ, लेकिन कोई रिलेटिव्स आ जाते और उनके हमारे 3 आवर्स तो वेस्ट हो गए, अब 1 घंटे में क्या ही पढ़ाई होगी, अब आधा घंटे में 30 मिनट्स में व्हाट वी कैन स्टडी। डू नॉट थिंक लाइक दिस, दैट 30 मिनट्स आल्सो मैटर्स। सो प्लीज always understand that your effort timing or how many of the other person is going to be affected or get benefited by okay, abhi live hai, we are live. Okay. So we are live again. I guess there was some technical glitch, so I guess my story has been communicated to you completely, I hope. You all must have been able to see me again. So the story I have was communicated to you, so you were able to understand the end, of course, that your effort matters. So give your best whatever you have for studies also, and for other things just do not bother. Give your best shot. That's what you can actually do. Everything else is beyond your control, so do not bother about those things. Those are beyond your control. So please study hard. We are going to discuss the questions, the test your knowledge questions. One by one, we are going to discuss all the questions. Okay. So Mr. Venus engaged in manufacturing of pesticides furnished the following particulars relating to its manufacturing unit at Chennai for the year ending on 31st March 2023. WDV of the plant on 31st March 22. That means last year closing. 30 lakh. Depreciation for that year is 4.75 lakh. New machinery purchased on 1st September 22 is for 10. New machinery purchased on 1/22 is 8. Computer purchased on 33 January 23. All asset were purchase account paid check. All asset were put to use immediately. New machinery purchased on 1st December 22 and computer have been installed in the office. During the year ended 31st 22, a new machinery had been purchased on 31st 10/21 for 10 lakhs. Additional debt beside normal depreciation had been claimed thereon. Depreciation rate for machinery is so and so. So you have to calculate the depreciation as well as the closing WDV. So let's calculate it. And I think I should calculate it on whiteboard. Let me open this question. So question was this. We have closing WDV on 31st March 22 for 30 lakh. Depreciation has been given 4.75 lakh last year. So for this year, for assessment year, calculation of depreciation and WDV for assessment year 23-24, opening WDV on 1st April 22 will be, this was the closing and depreciation deducted, so remaining will be 25.25 lakh. So this is my opening WDV, on which normal DAP, additional DAP. We can only claim normal depreciation of 15% over here. We will calculate it later. Then we have a new plant and machinery of 10 lakh rupees purchased. It's of course more than 180 days. So the value is 10 lakh. Additional DAP on this 20%. Then one again new plant and machinery for office has been purchased, which is less than 180 days for rupees 8 lakh. So for this, because it's less than, so we can claim 7.5% in normal DAP. We cannot claim depreciation because it's in office. Additional DAP cannot be claimed. Then one computer also purchased for less than 180 days and it's installed in office again. That costing 4 lakh. Computer depreciation rate is 40%, but for less than 180 days, so we will charge only 20%. We cannot claim additional depreciation. So if we will calculate now depreciation as per normal, that is 25.25, that will come around 3.79 lakh, 1.5 lakh, 60,000 and 80,000. That will come around 6.69 lakh. Okay. For additional DAP, we can claim in this asset additional DAP of 2 lakh rupees. And there was an information given that in the last year, there was an asset on which additional DAP is being claimed, but just because it was less than 180 days, we have claimed additional DAP of only 50% of the normal depreciation. So there was a last year additional DAP on an asset. The 50% has been claimed in the last year. So balance 1 lakh rupees will be claimed in this year. So total additional DAP that is going to be claimed in this year is 3 lakh and normal depreciation is 6.69. So total depreciation 6.69 normal and 3 lakh additional. So we can claim it. So balance value will be 37.56 lakh. That will be our closing WDV for 31st March 23, which will be opening WDV in the next year. So always you can do this, whatever your assets, you can write it down in front of it, additional DAP eligibility or normal depreciation eligibility. And then you want to calculate this depreciation over here, you can calculate over here, you can calculate to somewhere else, so you can. But if you will write that this is eligible for additional DAP and these are not eligible for additional DAP, etc., so that will help you in solving the question. If any asset has been transferred, I already told you, always use FIFO method until otherwise it has been write down that which asset has been sold. If it is written in question that computer has been sold for 3 lakh, then we will deduct 3 lakh out of the computer value. But until otherwise it has not been said that which asset has been sold, then we will always use FIFO method. This thing I have already explained to you earlier also. Back to our question, this is the solution, you can see. Okay. So this is like in round of provision. If you take the full value, you will find the same depreciation. Okay. Moving on to question number 2. It says Mr. Abhimanyu is engaged in the business of generation and distribution of electricity. He opts to claim depreciation. Now understand, he is in a power generation activity business but does not claim depreciation as per SLM measure. So terminal debt and balancing charge concept is not applicable because he is using WDV method. He opts to claim depreciation on WDV for income tax purpose. So for us, it's a normal question as a normal business. From the following details, compute the depreciation allowable as per so and so. So he can claim normal depreciation as well as he can claim additional depreciation also. We will solve it again. Separate sheet. Question number 2. Mr. Abhimanyu is engaged in the business of generation, distribution, WDV of the block of asset again. On 31st March 22 has been given in question 50 and depreciation for that year is given in question 7.50. So opening WDV for this assessment year 23-24 will be 42.50 lakh. Normal depreciation or we can claim additional depreciation. Of course, on opening WDV, we can only claim normal depreciation. Do not charge debt with the question. You should not charge debt right now. Maybe some of you must be thinking we should charge debt now. No, after reading the whole information, the full question, then decide to charge debt on this value or not. Because assume in this question it has been written that 5 lakh rupees asset has been sold. So we need to deduct it from FIFO method from the opening WDV. So if you charge depreciation without reading the full question, might be your normal depreciation will be wrong and then you need to recorrect it. It will waste your time. So please do read the whole question. You can write out the rate only, but calculation should be done after reading the whole question. Okay, new machinery purchased on 12th October 2022. So one new plant and machinery has been purchased on 12th October 22. That means less than 180 days. That is costing 10 lakh rupees. So we can claim normal depreciation because it's less than 180 and additional depreciation 50% also. Machinery imported from Colombo. One machinery has been imported from Colombo, which has been used in Colombo also. So it's a second-hand machine. We all know that we cannot claim additional DAP on second-hand machine. It has been imported on 12th April 2022. So that is costing 9 lakh. More than 180. We can claim normal depreciation on it, but we cannot claim additional because it's a second-hand machine. New computer installed in generation wing unit on 15th of July. And it's used in the factory, the generation wing. That means it's in a factory. So plant and machinery used in factory can be claimed as additional DAP also. It's more than 180, of course. We can claim 40% normal depreciation on computer and 20% additional DAP. So now there is no sale has been done in this previous year. So we can start calculating depreciation on this. We can calculate normal depreciation. It will come 6,37,500, I guess. This will be 75,000 and additional DAP will be 1 lakh. Then this will be 1,35,000. This will be 80,000 and 40,000. So my additional DAP will be 1,40,000 and my normal depreciation will be 9,27,500. You can deduct this depreciation from this value 9,27,500 and 1,40,000. That will be your closing WD. I hope it's clear. It's very simple. If you use this format, depreciation provision will be solved very easily. There is nothing to bother about the depreciation concept. It's too easy to solve. That was question number 2. Now question number 3 is just question answer you need to give. That's not numerical, that's theoretical. So that was question number 2 we just discussed. Okay, examine the reason. Now I will answer from you one by one. Let's see how much of you is ready to give your best. Just give your best. Whether answer is wrong or right does not matter. Just do one thing. Read the question carefully, implement the provision carefully, and then answer. Okay? Examine with the reason the allowability of the following expenses incurred by the Mr. Manav, a wholesale dealer of commodities. The important word is commodities. Okay? Under the Income Tax Act 1961, while computing profit and gain from the business or profession for the assessment year 23-24. So there is some expenses has been given. You just need to tell whether it will be allowed as business expenditure or not going to allowed as a business expenditure. So construction of a school building in compliance with CSR activities amounting to rupees 5,60,000. You just need to send your answer saying allowed or disallowed. That's it. Allowed or disallowed, you just need to tell. That's it. Nothing else. So give me the answer. Construction of a school building in compliance with CSR is corporate social responsibilities allowed as business expenditure or not. I'm waiting for your answer. These are kind of MCQ question what I am asking, but I'm not giving you the option because there's only two options, allowed or disallowed. Tell me fast. Are not allowed, disallowed. Kirti saying disallowed. Very well done. Send me more answers, of course. All should be attentive. You all should become a chartered accountant if you will follow your dreams with the right planning. CSR activity that has been specified. Tell me, is this expenditure is allowed or not? Tell me fast, this expenditure has been allowed or not? Correct answer is, of course, allowed. Well done. Bhumika is saying not allowed. No, Bhumika, it is allowed because this for section 35 AD. Storage of food grain warehousing is section 35 AD concept. And it says if you are purchasing building for it, the setting up of food grains, etc., this 450 is going to be allowed as your business expenditure under section 35 AD. Moving on to next section. Next point, of course. This is very interesting, of course. Interest on loan paid to Mr. X, a resident. 50,000 on which tax has not been deducted. On which tax has not been deducted. The sales for the previous year, 21-22, was 2,02,000. Mr. X has not paid the tax, if any, on such interest. So please ignore the sales for the previous year, 21-22, was 2,02,000. You just need to give me the answer on the basis of first sentence, interest on loan paid to Mr. X, a resident, 50,000 on which tax has not been deducted. So what is the disallowed amount? You need to tell me in this point number 3. Question number 3, kindly give me the disallowed. Point number 3, kindly give me the disallowed question. अपना आंसर दे रहे हो? I have made this cube. मुझे it was very difficult for me to make this Rubik cube. मतलब जब मैं छोटा था तो बहुत difficult लगता था और कोई interest नहीं था उसे बनाने में, इसलिए बहुत difficult लगता. अभी कुछ दिन पहले मेरा बड़ा interest create हुआ and I watched a video और जब मेरा इंटरेस्ट क्रिएट हुआ तो लाइक इन अ सिंगल डे और इन आफ्टर यूजिंग फॉर 1 or 2 hours I just made this Rubik cube, and my daughter has also learned this how to make this. So I realized when you have interest in something, so you can do it. I tried it a lot of time when I was young, of course. Once upon a time when I was young, like many years ago, there was myself. So at that time I was not able to do it because I was no interest in it. Somebody asking me and I was like, nahi ho raha, it's not possible, I can't do this. But in some days before my interest has just arisen after watching a video to make a Rubik cube. And then I have made this 2x2 Rubik cube. Now I am trying to do this 3x3 Rubik cube, and if I'll do it in some days, I will show you. So this is I made it. Fine. So question number 3. Singh Rajiv Kumar is saying 15,000 disallowed. Manisha is saying 30% disallowed. Bhumika is saying since loan is for residential purpose, so it's not allowed. No. Where it has been written that loan is for residential purpose, Bhumika, it has been write down just that interest on loan paid to Mr. X are resident. I've told you in TDS provision, you have to see the payment is made to the resident or non-resident. If a payment has been made to a resident, then 30% will always disallowed, 70% will be allowed in the previous year. So because 70% will be automatically allowed, 30% only, that is 15,000 is to be disallowed. Well done. Those who has given the correct answer, very well done. Next, commodities transaction tax paid 20,000 on sale of bullion. Now you need to tell me, is it allowed or not? Tell me fast. We need to solve numerical question also. So the correct answer is, of course, because he was dealing in commodities, and if somebody is dealing in commodities, then CDT will be allowed as business expenditure. So this is allowed. Okay. Moving on to next question. Question number 4. Again, you have to tell which is allowed or true or false. So first case, for a dealer in shares and securities, security transaction tax recognized to exchange is permissible as deduction. Yes, it's true. STT has been paid by the stock broker or person who is not a stock broker, sorry. The person who is dealing in securities is allowed as a business expenditure. Next, where a person follows mercantile system of accounting, an expenditure of 25,000 has been allowed on accrual basis in a later year. In respect of the said expenditure, assessee make the payment of 25,000 through a cross check. 20,000 can be the profit and gain of business under section 40A3 in the year of payment. The provision says yes. If you have claimed any expenditure on due basis, on mercantile basis in some year, but you paid that amount in some other year more than 10,000 in cash. In section we have learned it that if you paid any amount exceeding 10,000 to a same person, same date as to be disallowed. So this 20,000, in which year you have paid that? If it is exceeding 20,000, that will be deemed your profit because you have actually violating the provision which says that 10,000 cannot be more than 10,000 cannot be paid. Same person, same pay. So even if you have claimed the deduction in earlier year on due basis, but in any year if you violate that provision, that amount will be treated as your deemed income. Is it mandatory to provide depreciation? In the initial of depreciation, it has been taught that depreciation is compulsory. So the answer is true. It is mandatory provision. The medical premium paid by General Insurance Corporation, Mr. Lomesh, for his employee by a draft. Of course, draft is a mode other than cash. So it is again allowed. Under section 35 D, amortization of expenditure incurred under eligible voluntary retirement scheme. A time retirement alone can be done. The answer is no, it's false. Next point says an existing assessee engaged in trading of activities can claim additional depreciation. No, additional depreciation can be claimed only by the manufacturer, not the trader. Here are the detailed provision. You can read it from over here. I want to solve numerical question with you. Those kind of numerical question which is going to be asked in examination, of course. Next, question number 5, examine with the reason following allowability. Is it allowed or not? Provision made on the basis of actual valuation for payment of gratuity that is 5 lakh. However, no payment on account of gratuity was made before due date of filing return. The answer is no. The valuation based gratuity can be payable only when it has become due during the previous year. So because it is not due during the previous year, this is going to be disallowed. Purchase of oil seed in cash from a farmer on a banking day. Because if you pay something to a farmer for his agricultural produce, that can be claimed as deduction. This is the exception of that provision which say you cannot pay more than 10,000 in a person, to the same person, same day in cash. So this exception that is in rule number 6DD. Tax on non-monetary perquisite provided to an employee, 20,000 rupees. I have taught you this provision is a very interesting concept which say if employer provides any perquisite to the employee and the tax on that perquisite is borne by the employer, then the value of that tax which has been paid by employer on that perquisite will be exempt in the hands of employee, as well as the expenses of employer cannot be claimed. That amount of tax that has been paid by employer on that perquisite will be exempt in the hands of employee, and same cannot be claimed as deduction in the hands of employer. Payment of 50,000 by using credit card for fire insurance, if it is for business, definitely it is allowed. Salary payment of 4 lakh to Mr. X outside India by a company without deduction of tax, assuming Mr. X has not paid any such salary income. So the answer says, the point number 5, if you pay anything as a salary outside India and no TDS has been deducted, then in that case, you cannot claim it as a deduction. So that is disallowed. You payment made to a transporter. In case of transporter, the limit is 35,000. So if you are paying 30,000, it is allowable as deduction. Question number 6. Payment made in respect of a business expenditure incurred on 16th of February 2023 for 25,000 through a cross check. Is it allowed as a deduction or not? The provision says, yes, it has been allowed as a deduction. Cross check. It says, reason the following statements are true or false. Payment made in respect of business expenditure. Okay, it's hit by the provision incurred on 16th February 2023 for 25,000 through a cross check is hit by the provision of section 40A3. The correct answer says yes, it is hit by the provision of section 40A3. That means cross check will be treated as more just like a cash. So it should be an account pay check. If there is written in question that is a bearer check or cross check, it will be equal just like cash. So if you have paid 25,000 through a cross check, that is going to be disallowed. It is a condition precedent to write off in the books of account the amount due from a debtor to claim deduction. Yes, to claim deduction of a bad debt, in the accounts the amount should be write off. It has been write off, then only you can claim deduction under this section. Failure to deduct tax at source in accordance with the provision of chapter so and so inter alia from the amounts payable to a non-resident or rent royalty will result in disallowing by computing the business income. Yes, the correct answer is yes. True. Okay, so I want to solve this kind of question with you. Mr. Shivam, a retail trader of Cochin, gives the following trading and profit and loss account for the year ended on 31st March 2023. So this kind of question is going to be asked in the examination and you need to solve it as the format I have told you in the first day of our class. So Mr. Shivam, a retail trader of Cochin, gives the following trading and profit and loss account for the year ended 31st March 2023. The P&L account as per accounting has been given in question. Additional information has also been given. It was found that some stock were omitted to be included. In both the opening and closing stock, the value for which is opening stock has been undervalued 9,000, closing has been undervalued than 18,000. Salary includes 10,000 paid to his brother, which is unreasonable to the extent of 2,000. The whole amount of printing and stationery was paid in cash by way of one-time payment to Mr. Ramesh. The detail for depreciation, point number 4, has been given to calculate depreciation and other information also. So they are asking, you are required to compute the profit and gain of Mr. Shivam under presumptive taxation 44AD also. And also as per the normal provision, and you need to tell him which way is correct. assume that, you have to assume that all the turnover, all the sale has been via checks. So when we will calculate as per section 44AD, we will take 6% of the turnover for the purpose of computing his income under section 44AD. First of all, let's calculate profit as per normal provision. I want you all to be with me and please be attentive when I'm solving this. It will really helps you to understand how to solve the question in case of pgbp. So I guess I should solve it on the sheet because over here there is no much space. There's a problem that how you will see the sheet. So let's discuss it one by. Let me tell you what is in the question. First of all, the net profit has been given in question 50,000. Okay. Moving on to our question. What needs to be added back from the credit side? Always start your question from the credit side. Okay. So we will take the credit side and you will see. Let me ask you some question. It's very simple to solve. Credit side is always very easy to solve. Is sales should be added back or deducted? No, it's a business income. It should not be deducted from anywhere. Same as closing stock is part of my business. Income from UTI, Unit Trust of India. It's a kind of a income that is kind of a mutual fund income. It is a part of income from other source. So I need to deduct this from my profit of 50,000. This needs to be deducted. Then opening stock is correct. There is additional information. We will solve the additional information after solving this format. Purchase, that's a business expenditure, gross profit, salary, rent and tax rates, interest on loan, depreciation. This is as per accounting provisions. I'll add back it when I'll find out my income tax depreciation. So we are going to add back this depreciation. Printing and stationery, there is some additional information. We will solve it later. Postage, telegram. Okay. Now the loss on sale of shares, that is short term. That is my capital gain part. Loss on sale of any asset is a part of my capital gain. So this needs to be add back again. Other general expenditure. So from this profit and loss account, I only need to deduct this income from UTI and need to add depreciation as per accounting and loss on sale of shares. After that, only additional information need to be solved and the depreciation as per income tax provision. One more interesting thing you should understand, if in the question, depreciation as per accounting has been given. Like, first of all, we need to deduct the income from UTI. That was 2,400. Then depreciation as per accounting needs to be added back. Because calculating depreciation as per income tax information has been given. Suppose in question, there is no information given to calculate depreciation as per income tax. Only accounts depreciation has been given in the trading and P&L account. But no WDV, no information has been given to calculate depreciation as per income tax provision. So in normal case, what we do, under net profit, we add back depreciation as per accounts, and then we calculate depreciation as per income tax and deduct it. But if in question, there is no income tax depreciation calculation information has been given, then you need to add the depreciation as per accounting first and assume this depreciation is equal as income tax also. So they both are same. So if it is in question, depreciation as per income tax calculation information is not given, then add the depreciation as per accounting provision and deduct the same assuming as this is the depreciation as per income tax also. Do not think that why should I add back and deduct? I should not do anything. You should have to show this plus and minus separately, because if you think that there is no impact on the profit, if I'll add back it and deduct it, so why should I need to show it? So if you're not going to show it, so examiner may think that you might not know this concept that if it is an examination, it has not been given, then the income tax debt is equivalent to accounts debt. So if you're not writing anything, he might think that you might be forget to treat the depreciation provisions. Always add back and deduct the same amount if there is no information giving regarding calculation of depreciation as per income tax. So depreciation has been add back 1,05,000, UTI income has been deducted, and then loss of sale of share. That's a part of capital gain. We need to deduct it. Now, one by one, we will solve the additional adjustment. In additional adjustment, it has been given that it was found that some stock were omitted. So it has been saying that opening stock undervalued by 9,000 and closing stock has been undervalued by 18,000. So if I'll include opening stock in my trading account, then what should I do? Should I deduct this 9,000 from my net profit or should I add back? So I am asking this question to all of you now. Tell me the treatment of this now. If opening stock has been undervalued and if I will include in my profit and loss account this, if I am including is, then what impact of this will be on my profit? What we are solving, we need to add this or deduct it. And the same, if I am doing 18,000 including in my closing stock, should I add it or reduce it from my profit? What we are doing. So this 9,000, 18,000 has not been written in the opening and closing stock as given in the above trading and profit and loss account. And income tax was asking, kindly include this in your profit. So when I'm going to include this in my profit, should I add back or deduct? So please send me answer by writing opening stock treatment, opening stock plus or minus, or closing stock plus or minus. I'm waiting for your answer. Let's see. Oh, somebody has sent me answer instantly. Aisha Safa Sayed. Okay. Very well done. Aisha is saying profit will be reduced in case of opening and closing stock should be added to the profit. Well done. High five from Wi-Fi, Aisha. Diksha is saying first need to add, second need to deduct. That's wrong. If I will add opening stock in my, suppose, what will be the impact of this? It's very simple. It's simple mathematics. If I'll increase opening stock by 9,000, that's my expense side. So if I'll add 9,000 in my opening stock, so my profit will get reduced. If I'll increase anything in debit side, always my profit will be reduced. And if I add anything in my credit side, always my profit will increase. So opening stock will have effect to reduce my profit and closing stock will effect to increase. So in my profit, I will deduct 9,000 and I'll add back 18,000. Clear? Now salary includes 10,000 paid to his brother. Brother, that means a specified person. That means relative, which is unreasonable to the extent of 2,000. Now tell me what should I do with this 2,000? I need to add it or should not add it or should reduce it? Should I add 2,000? Should I reduce it or I should not do anything with 2,000? I am waiting for your replies. Well done. All of you have given the correct answer. Bye, sir. Okay, Aisha. Bye. Good. So now tell me if he is paying salary 10,000 to his brother, which is unreasonable to the extent of 2,000. So what should I do with this 2,000? Should I add back? Should I reduce? Should I not need to do anything? The salary need to be add back. I have told you a provision that if any expenditure exceeding the FMV and it's paid to a specified person, that means relative. So the excess amount is going to be add back to your profit. So it's 2,000 in excess. So excess should be add back to the profit. The whole amount of printing and stationery was paid in cash by way of one-time payment to Mr. Ramesh. So printing and stationery was 23,200. It's paid in one day and paid in cash. What should I do? Should I add back 23,200 or should I not do anything? Ms. Kriti, not reduce 2,000. If you paid any expenditure which is in excess, then we have to adjust that excess. That means salary includes 10,000 in which excess 2,000 has been paid, excess 2,000. So we need to compensate it. So that if I reduce 2,000 from the debit side of any expenditure, so my profit will always increase, always increase. Just remember this thing. All of you should understand one thing, very, very simple thing, and you should know this thing. If I am going to reduce any expenditure, anything from debit side is going to be reduced, anything, then its effect on my net profit will be addition always. If I'm going to reduce anything from debit side, my profit will get reduced. And if I'm going to increase anything in debit side, anything, then my profit is going to be reduced. It's a simple mathematics. It's a debit side. If I'm going to add anything in my expenditure, my profit will go down. If I'm removing any expenditure, my profit will go up. Same vice versa over here. If I'm adding anything in my credit side, increasing anything, then my profit will increase. And if I'm reducing anything from my credit side, the profit will get reduced. It's simple mathematics. There is nothing to bother. It's very simple. So because my 2,000 rupees was excess expenditure in case of relative, so what will happen? My profit will increase. Stationery paid 23,200 in cash, same person. So what we need to do? It should be allowed or disallowed. Let's see. Add back. Well done. Who is this? Rajiv Kumar. You also have a high five from Wi-Fi. Okay? So that's why in the stationery and printing is 23,200, which has been paid in cash. That is disallowed as per income tax. So I have to remove it from my this profit. So if I remove this value from profit, so what I need to do it? I need to add back 23,200 because if I remove 23,200 from expenses, the profit will go up. So I have to add back this 23,200 also. Now the depreciation. Before depreciation, let us complete point number 5 and 6. Rent and rates include GST liability 3,400 paid on 7/4/2003. So it says GST is indirect tax. In section 43B, we have understood that any indirect taxes, stamp duty, fees by whatever name called, and cess, if it has been paid before due date or up to due date of ROI, then you can claim the deduction in the same previous. So rent and rates include GST liability and it's paid before due date of ROI because ROI due date will be 31st of July or 31st of October in this case. It has been paid before that date. So 3,400 is a allowed expenditure and we have already claimed it. So it is an expenditure we have already claimed in our profit and loss account, and it should be allowed an expenditure as per income tax also because paid before due date. So we should not to do anything of 3,400. Remember one thing, it's not mandatory that whatever has been given in additional information need to be solved. There might be something which has not going to be any treatment. So rent and rates include GST liability in accounts, the above profit and loss account, and claimed as expenditure, and as per income tax because it has been paid before due date of ROI. So as per income tax also it's a allowable expenditure. So we need not to do anything of 3,400. It's not a rule that you should do something which has been given as additional information. No, it might be that some information is just to confuse you. It has no treatment because the treatment under accounts and income tax for 3,400 should be same. Other general expenses include 2,000 paid as donation to a public charitable trust. So any one of you can tell me what should be the treatment of this public charitable trust? This 2,000 should be add back or reduce Or what should I do with this? Kindly let me know. 2,000 donation to public. Do we read any provision regarding this donation under pgbp, that it should be allowed or not? Yes, we did it. Not the specific name, but as a general provision. If there's any expenses is given in your question, and if there is no specific provision you are finding in the provision, then always apply section 37. 37, which is like Shakespeare section, I told you. That if there is no specific, then you have to put this expenditure as per section 37 condition. If it fulfills section 37 condition and no other section objected, you can claim it as a expenditure, otherwise cannot. Jyoti Prajapati. Correct answer is, of course, 2,000 should be add back, because donation to a public charitable trust is not a business expenditure. Section 37 says the expenditure should be for business purpose. Now the depreciation concept we need to solve. You can see the opening WDV has been given 4,20,000. Correct. A new plant falling under the same block bought on 1st July, that value 70,000. And two plants were sold for rupees 50,000. So balance WDV will be 4,40,000. You need to calculate depreciation on 4,40,000. That will become 66,000. So income tax depreciation will be 66,000. So let me show you the solution way. Of course, we are short of time. We need to solve 3-4 more questions. So we were technically solve the P&L part. Now, as per additional information, opening stock value should be deducted 9,000. Closing stock value should be add back 18,000. Then salary to brother, which is in excess, 2,000 rupees should be add back. Then printing and stationery payment the same day to same person, 23,200 should be add back. Now depreciation as per income tax will come 66,000. This need to be deducted. If in question this depreciation calculation point has not been given, then I am going to deduct this depreciation 1,05,000. Again, assuming the same has been allowed under income tax. And last is donation. So my net profit as per income tax, the correct answer will be 130,900. Clear? Moving on to our next question. I just wanted that within 15 minutes we need to cover all the question. This is the solution. You can find it out. Okay, this is nice. Mr. Sukhvinder is engaged in the business of hiring goods carriages on 1st April 2022. He owns 10 trucks. Let me see how many numerical question has been left. I guess 8 is a numerical question. Then 9 is the numerical question. Then 10. Okay, and we have only 9, 10, 10. So we will be able to complete all numericals, not to worry anything. Okay. This is a very interesting question. Mr. Sukhvinder is engaged in the business of flying goods carriages on 1st April 2022. He owns 10 trucks, out of which 6 are heavy goods vehicles. The gross weight of such goods vehicle is 15,000 kg. So you can see that he was having 10 trucks. So section 44A applicable. Okay, in the last question we have discussed, so we find out the profit as per normal provision. But in the last question, he was also asking calculate profit as per 44 AD also. All the transaction has been done as per out of bank. So we need to calculate 44 AD income also. It's very simple. The turnover was 1,12,11,500. 6% of that we need to take, that will become 6,72,690. So as per 44 AD, if we calculate his income, that will be 6,72,690. And as per our calculation, it must be 130,900. So he need to pay tax as per the lower value, that 1,30,900 will be your correct answer. You can read this provision. So now moving on to our Sukhvinder question. So what Sukhvinder is saying, let's see. So Sukhvinder has maximum 10 trucks during this previous year. So he is satisfying condition 44A, of course. Now 6 of our heavy goods vehicle, the gross vehicle having 15,000 kg each. On 2nd May 2022, he sold one of his heavy vehicles and purchased a light goods vehicle on 6th May 2022. This new vehicle has put to use is irrelevant in section 44A, is no use. So now we need to calculate is the income as per section 44A. First of all, he was having in April, the new purchase has been purchased, the new vehicle has been purchased and an old vehicle has been sold in May. So in April, it was 6 heavy vehicle he has, 15,000 kg, that means 1,000 for each. So 6 heavy vehicle, 15 metric ton. And he sold one of the vehicle in May. So technically, 1,000 per month or part of the month is the concept. So in May, of course, he sold it on 2nd of May, but we will consider the whole month. So 6 heavy vehicle with him was for 2 months, April, and we will consider May also. So total value of 6 heavy vehicle till May was 1,80,000. After May, now he has only 5 heavy motor vehicles. Till May, we will take all 6 because he sold this vehicle on 2nd of May. And the provision says 7,500 per month or 1,500 per month or part of the month. So even if you used one vehicle for even a single day in a month, the full month value will be considered as your net profit. So 6 vehicle with him was for till 2 months, and because he sold one heavy vehicle in May, so now for May onward, now from June he is having only for 10 months calculation need to be done. So technically he was having 6 motor vehicle till May, and from June now he was having 5 motor vehicles for the calculation. So this will come 7,50,000. So this is from April plus May. These are from other than heavy vehicle. So because 4 vehicle was light motor vehicle, because 6 was heavy, so that means 4 vehicle was light motor vehicle or medium. So for the calculation of this, 4 motor vehicles, 7,500 rupees per month. And this is only for 1 month, because from May he purchased one light motor vehicle also. So from in the month of April only, he was having 4 motor vehicle, which is light or medium, only for the month of April. And from May onwards, now he is having 5 light motor vehicle for 11 months. So this will 7 lakh, this will 4 lakh, 12,500. This will from May till March. So it's quite tricky question because of sale of one motor vehicle of heavy and purchase a light motor vehicle on the same month. So please do not get confused when you are solving light motor vehicle. First of all, solve those provision light or heavy separately. So if we can say that heavy motor vehicle, we are having 6 heavy motor vehicle in April, 15 into 1,000, and because he sold this heavy motor vehicle in May, so 6 motor vehicle will be considered for the purpose of deemed profit for the month of April as well as May. From June, now he is having only 5 heavy motor vehicles, so that calculation will be done now. In case of light motor vehicle, we have in April only 4 light motor vehicle, so we have calculated only 1 month provision separately, and from the May onwards, now he is having 5 motor vehicle, which is light or medium. So now the calculation from May till March will be done as per these provision. Total will be 13,72,000 500. For all these four calculation, total will be 13,72,500. I hope it's clear. If you have any confusion in the solution of any numerical, you can ask me when we will start our capital gain session, or just believe me, once again try to solve it and read with the provision also, then solve it. You will find that this is not that difficult, it's easy. So moving on to our question number 9, which is again a full question to solve. A full question to solve. So in this question, it says, Mr. Raju, a manufacturer at Chennai, gives the following manufacturer trading and profit and loss account for the information. We're going to solve it. The P&L account has been given and the information for additional information has been given over here. So let's solve P&L account one by one and then the additional information impact. Okay. Let me solve this on a separate sheet. So in the question, the net profit has been given as per accounting provision, 5 lakh rupees. So last question. Now moving on to our trading and P&L, which has been given in the question. Sale is given. I'm not going to show the other screen. It will take time to again and again switch the screen. So I am telling you, you should check it later on. So sale is given. I'm not going to do any treatment with sale. Closing stock is also a part of our business. Its dividend is given 15,000. So dividend is income from other source. We need to deduct it from here. Dividend. Then income from agricultural also given, that is exempted from income tax. So we need to remove it, the effect of agriculture income from our business P&L account. Clear? The credit side has been done. Now on the profit side, opening stock has been given. We need not to do anything. Purchase, manufacturing, wages, etc. All are correct. Then administrative charges, again the business expenses, SGST penalty. That is given as GST penalty. That means GST penalty. I have told you all penalties should be disallowed. All penalties should be disallowed. So this is 5,000 need to be, and if I'll deduct any expenses, it need to be add back. GST paid is our expenditure. We need not to do anything. General expenses, our expenditure. Interest on loan on machinery term loan. That is also our expenditure. To depreciation. So this is depreciation again as per accounting provision. I need to add back the full depreciation. So P&L has been sorted. Now moving on to our additional information. Administrative charges include 46,000. Administrative charge includes 46,000 paid as commission to brother of the assessee. The commission amount. So he paid 46,000 to his brother as a commission. The market value is for 36,000. So excess payment of 10,000 as a commission. So what we will do, we will add back it because payment to a specified person. The assessee paid 33,000 in cash to a transporter carrier on 29/12/2022. This amount is included in the manufacturing expenses. Assume that the provision into TDS are not applicable. So he is paying 33,000 to a transporter up to 35,000 limit is in cash allowed to a transporter. And he is paid only 33,000 cash in the same day to a transporter. So this has been allowed. So we need not to deduct or add back anything for this point. A sum of 4,000. This is an interesting point. A sum of 4,000 per month. Let me show you this point. A sum of 4,000 has been paid per month. A month was paid as salary to a staff throughout the year, and this has not been recorded in the books of accounts. Now a different concept has been taken by the institute. It is saying that 4,000 per month was paid as salary to a staff throughout the year. and this has not been recorded in the books of accounts. So as per the point has been given, it has looks that is not a mistake, but it has been written. It has been intentionally done. That salary has been paid 4,000. So under section 69C, which has been provided in basic chapter number 1, that any expenses which is unexplained expenditure, if you are done any expenditure which is unexplained, so we assume that in this case, assessee was not able to explain that why he should not show this expenditure in profit and loss account. So we treat it as an unexplained expenditure for this profit and loss account, and whatever is your unexplained expenditure will be treated as your deemed income. So that is need to be added back to the profit because you did not show this expense. That means this expenditure is not recorded over here. This is not in our P&L. So if it was a genuine expenditure, we could deduct it from our profit because it has not been shown in the P&L. So if any expenditure which has not been shown in the P&L, if we show that amount in income tax, so our profit should get reduced. But because this is treated as an unexplained expenditure, so it will be my deemed income and need to be add back like this in my profit. That is deemed income, unexplained expenditure. 4,000 per month, that means 48,000 in a year. Now for interest, it says that bank term loan interest actually paid on March 23 was 20,000 and balance was paid in November. So for interest, section 43B applicable, which says the amount should be paid up to due date of ROI. So interest was 60,000, out of which only 20,000 was paid before due date of ROI. Balance 40,000 has not been paid up to due date of ROI. So that is going to be add back in the profit. And now the depreciation concept has came. Depreciation, if you will calculate, that will come to 2,23,500. Depreciation as per income tax will be 2,23,500. If you will add back all these or deduct, answer of net profit will be 3,84,500. So this 4,000 concept, you should read it from over here. This has been added back. Salary paid like this. Not recorded books of account is treated as per section 69C. And it's going to be taxable with a taxable rate of 60%, then surcharge is 25%, then cess is 4%, aggregate rate was 78%. That is our answer. Of course, income from house property has been given. That will be as a loss we need to claim. Dividend income will be form a part of your income from other source. Deduction you not have read yet now. That's why we are not going to include it, not going to read it. That was calculation of WDV and depreciation. Question 10 is connected with agriculture income. That means component business. And because you must have read all this provision in chapter number 1, so we need to skip question number 10. So total question was 10 in test your knowledge topic, and we have discussed all the 9 questions which was related to our pgbp topic. Before ending this topic, I am again saying please revise twice. That's my advice to make you wise. That's the only thing which can make your study very strong if you're going to revise these provisions. If you have any problem in any provision, try to revise it once or twice. Just try to revise it. And I believe that that concept, whatever you feeling is difficult, then you will feel that it's not that difficult. So we have completed our PGB provision. We are going to see each other on our next session. That is the day after tomorrow regarding the capital gain. So we have 5 sessions for capital gain. So I'll try to tell you a small story in every lecture, which might motivate you as a person, as a student, as a human being. So please take care of yourself, and we will meet day after tomorrow with capital gain topic. If you have any issue in your PGBP provision, do ask me in the next session also. I am over here. I'm not going anywhere. You can ask me whatever problem you have in our PGBP session, in our capital gain topics also. Fine. Please do read the charts. Questions. Try to solve last year questions of PGBP. And I believe You will be able to solve each and everything if you learn the provision correctly. So take care. Goodbye. Having a very, very good day. So Manish ji, can we close?